Hi, this is Elliot Wave Sage. I want to do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So the market today started to rally. So looking at this two wave here, and of course the two wave. What we would like to see is maybe a little bit higher and then a reversal. There's a news event coming up. I believe jobs report, right? So that could be it, but I don't really care about the news. Just so much chatter on the internet about massive short squeeze, go long, da 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 da. We're going to bounce in a couple weeks and we're going to crash. Only if it was that easy, right? I always said the 1987 style crashes, those kind of crashes, don't bounce. They don't bounce. Bounces fail. And they get weaker and weaker. And in some ways, that's what we're seeing. Here they're getting smaller and smaller. So we'll see where this two reverses, and it's yet to be seen if it's going to finish out like I have here, or it's a 1, 2, 3, 4, 5, and then we do get a bigger two in one move down. So we need to take a look at the overall cycle. The 4-hour cycle, I think, will help us understand this better. So we still don't have a cycle break yet for this leg lower. It looks like it wants to correct that 4-hour cycle, as you can see. But as you can see here, there is no break. So if you're going long here thinking, oh, this is the pump, it could get rejected back on this downtrend line and it could come back and erase divergence. Okay. So until we cross this line and close, then there is no then this count is valid. I have the bearish count. Now if once we cross that 4-hour line I showed, then we go to the 1, 2, 3, 4, 5 count and go from there. Let's take a look at the daily on the Dow Jones, and the same phenomena here. You can see, we're trying to correct this daily cycle down here, and we haven't quite done it yet. It's trying to do that. Now, you could make the argument that the daily cycle was corrected right here on this, and that's your 1, 2. And then, of course, your next 1, 2, which is kind of how I have it labeled. Here 1, 2, 1, 2, and then the 3 of 3 desisting just massively goes oversold. So we don't know. No one can predict the future, but it is at an interesting point. But whatever happens here, it's going to fail. It will be a gift too short if it does pump. If we do get this pump. Here, 700-800 point pump. The SPY, looking at a 1, 2 again. Here's your rejection off the downtrend line, and now we're just correcting this first wave down. Could we still be in 2? It's possible in an A, B, C flat. Again, the 4-hour cycle is it's trying to curl up. If it can do that, then it's a bigger wave in a 1, 2, 3, 4, 5, and then we would come back to 432 and probably get rejected there for a gift, like a gift too short. So let's take a look at the daily cycle here. As you can see, we would need the daily cycle to break this. So we're still in bear mode on the daily cycle, but the 4-hour would be your first warning sign that we may have that. But as you can see, we're still in this bearish pattern. There is no reversal. So anyone going long here, you haven't had any kind of confirmation or breakout of the cycle yet. Okay. And then, of course, technology, really tricky here. This cycle looks like to me some kind of 1, 2, and then maybe a 3, 4, 5. Really tough to say. Now, it does seem like that has corrected the whole leg, as you can see. So however this subdivides is irrelevant, because this is one cycle and got rejected, and I do believe it's it could be another 1-2 like I have here for more downside, which is why I decided to take more short positions on close, and got the candle I was looking for. Now I have an open mind that we could still be in two as well, and then this is negated, and we get a pump in the next day or two. But this would be, again, what a gift for and getting entries. This will get us to 364, 366. Again, perfect setup to back test the downtrend and get a rejection there. Here, somewhere in that area. So that could be a setup for a nice short opportunity if it presents itself later. And again, that could be like a 1-2, 3, 4, 5, and this 1, and now we're in this 2. It could be something like that, but it doesn't have to be. It could still be a 1-2, 1-2. So I don't know. No one knows the future, but if you're just thinking, hey, I want to buy it because it's oversold. Well, how did that work out for you in bonds the last couple of weeks? Oversold doesn't mean crap, unfortunately, in a wave 3 market. And if this is going into a 3 of 3, it will be even more oversold. And that's what you'll want to see in a crash scenario. You're going to want to see no bounce. If you believe in the 1987 situation is happening in 1929, you're not going to see a relief rally. You're not going to see a massive retrace. It's not. It's just going to keep failing. And in each failure will be shorter and shorter and shorter. So here we are in the futures. It'll be interesting to see if this is where we get rejected and if we can get this pushed lower. Again, that's why I thought this short tech could have been a good risk to reward setup. But even if we do pump back up, I want to add to that position and ladder in for this next leg lower. I've already got paid on this leg and took profit and then short on that flag, took profit. I'm out now. I'm re-establishing a new position for this net for a move that's similar of size coming either here or already in it. That's what I'm looking for. And like I said, I would be more cautious on the short side if we were down in these areas here, SPY, maybe 412, and like the Qs down here at 330s, 340. Dow Jones down here, down in this area here, 31,000. So I'm really watching individual stocks too. And none of them have got to the point where I can say that they should rip higher. There's still more downside in this market. Gold still has more downside. It's just in this wave 4. Okay, silver just in a wave 4, and it's actually got more. It's got to grind lower. We got the bond market again tricking people. So the 10-year hit this resistance area, and it did get a nice rejection. I do believe, looking at the swing count, it's got more upside to come, and we'll get through these areas of resistance. And like I said, once you get through that, then it's pretty much smooth sailing to 7% after you get through this congested area. So that's where we are. And again, if the daily does start to diverge, if we can get daily divergence, then we have maybe a new setup and we'll reassess. Now, what's interesting is the 10-year never did erase divergence, but the 30-year and 20-year did. So it is interesting. So my guess is the 10-year will eventually erase that and catch up. And the 30-year, 20 years already in this cycle. Here, it looks like it's in wave 4 of this fifth wave right now here, but do what's best for you. But this should continue to pressure the market. The dollar index, again, is just, trying to find a top here. And we could be in the B wave connector or this Y wave already. So we could be in this situation. But like I said, we should get a nice pullback here. But if it does make another high, then it's an impulse off the bottom, and then it's in a 1, 2, 3, 4, 5. So it'd be interesting to see what happens, but we should still go higher. The other alternative is it's still in this X wave and a flat, but I don't think so. And of course, the VIX is being real tricky, but it is closing still above the neckline here, and that is very bearish. As long as we're in this area, we could bust out to 26 at any moment and have a massive panic. It's only when we're below this area, this 18, is the bulls take charge again and can really push it and get a bigger relief rally. So if you're looking for a bigger relief rally, a face ripping melt up squeeze, I'm not really worried about the 4-hour cycle break-in. I would want to see the daily cycle break upward, and as you can see, it's still got some work to do here on the SPY. Plenty of space, but if we can break that daily cycle higher, then you'll get a bigger move squeeze. But also the weekly cycle too is something to keep in mind. Here, this is the weekly on the SPY. And again, until the weekly cycle breaks, as long as we're below this line, the market is in bear mode and it should be short the rips. But if we do cross over that, then it changes the conditions to where I would start to want to be long and not short anymore. So that's the weekly cycle. So until those things happen, I'm not counting on any face rip and rally. I'm in fact counting on a crash. That's what I'm counting on. No face rip and rally is going to happen as long as those indicators are in those locations. And then finally, of course, there is the monthly, in which I haven't shown, and that is a more a dire situation here. If you look here, as long as the monthly is below this, then we're in a bear market, potentially secular market now with the connector wave. So if you do believe we're going to go to SPY 500, we need this monthly to cross over here. So until those indicators, and I'm just giving you the SPY, but you can do it for all these indices, but until we can cross those trend lines, the bears are still in control, and I think the right trade would be short rips and be cautious, because this is still a declining market, but do what's best for you. All right, so that's what I'm seeing right now, and just kind of real quick, let's just see technology again. People just don't want to give up their technology stocks, and I get it that everyone loves them, and they're coveted, and they're so awesome company, products, but this Apple is, I mean, come on guys, this is going to break down. This is just playing games with day traders. It's waiting for the right news to show up. This 2-wave keeps pushing up higher. I could care less. I'm not really worried about Google, but I do want to see that drop in 3. Same thing with Facebook. Tesla looks like it pushed up in wave 2, like it tends to do in a 3-wave move. But again, it's doomed for failure soon. Nvidia, the same thing. Although this could be its 1-2 moment, so we'll keep that in mind. And then Microsoft as well. And it looks like it hit a 1-2. Plenty of downside left in these and many other stocks, Palantir. I can just keep going down the line. And the market just isn't in an area where I see things ready to bounce and support. Like, I want to keep an eye on Eli Lilly. This is the epitome of the grand super cycle. This is is quintessential stock that represents the baby boomer grand super cycle chart from the 1980s till now. And if this is in a correction, then there's no way the indices are going to new highs. So this has to come down. I want to see it come down to here, even if we get a connector wave. So this is telling me the market still's got more downside until we're in this area here. We did see POD today break down in this wave 5. There was news the CFO resigned to go to a new company, and people panic when that happens, and it's really irrelevant. And it could be this 1-2 get down a little deeper. The other alternative is it could actually be finished even here. Tough to say, but I do think, given where the market is, it's still got to push on lower. But again, just kind of more downside coming. And they're just looking at different stocks, mRNA, and again, this too could still come up, but I will expect it to fail. And then, then the staples, I like to keep an eye on. Pepsi is one where, where's that trading right now? And we need to get further downside here. It's just not quite there yet. You know what I'm saying? So that's another one. Discretionary, again, looking at different stocks, and they're just until we get to these other areas where when I can sit there and click, like we need Starbucks down here, when I click through these and we are in these areas that I have highlighted in 4, 5, 6 different major stocks, then I think the market has a good chance of having that base ripping, counter trend rally or a potential bottom, maybe, even. But until that happens, markets should be in bear mode, under pressure, sellers are in control, and any balance is really opportunities to short. And like I said, I think technology's got a great setup opportunity still for the short position. I believe we could be in this situation, which means we'll have a massive sell-off tomorrow. If that doesn't happen, then we would be pushing higher into this area, which would be a great opportunity or gift to short that. Maybe this gap gets filled, and then and we back test this trend line, downtrend line, trend line, and then we get rejected. So that's what I'm looking for. And here again, we're in this one too. So good luck, guys. That's all I have for today, and talk to you guys later.